Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market analysis, trade ideas, and mechanical trading systems like you see here since 2003, which by the way, blew it out of the park in 2022. We've been doing that since 2003 for individual traders and professional institutions, which I consult with on a weekly basis. And again, happy 2023, everyone. This is going to be a comprehensive weekend newsletter and for the first of the year, first one in 2023. So let's go ahead and get started. By the way, this is our back end recording system, and I'm going to go ahead and start this for the non-YouTube version of the website. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, welcome to 2023. This is the first newsletter, and again, this is a comprehensive newsletter. So hope everyone has enjoyed their time off, and I'm sure a lot of you are still enjoying your time off today. As you know, the markets are closed on January 2nd, Monday, for New Year's. Okay, markets start back tomorrow. Futures will start trading here tonight after 6 p.m. Eastern Standard Time, so we'll see where they open at. All right, but again, hope everyone had a great 2023, and you can see I have quite a bit of text here and my table of contents. The newsletter here divided into 9 major sections. If you're new to these long form weekend type newsletters, they tend to be anywhere from 40 minutes to 1 hour in length. Very comprehensive. Again, this is the first one of 2023. So, like I said, I think we had a great 2022. Steve and I called for a bear market way back in December of 2021, and we confirmed it in January 2022, which was the right call. We also gave some long-term swing ideas for the energy market, which performed very well, as did a lot of commodities. What performed also well in 2022 was, the low PE stocks, not the growth, not, anti-Kathy Woods essentially. So, and I think that is, if you want some predictions for 2023, I think that those areas you can continue to do well. That's why the Dow was down the least in 2022, and that's why the Nasdaq was down the most. Okay, one of my favorite ETFs for, low PE stocks that pay dividend is VYM. That's the Vanguard High Dividend ETF. If you account for the dividends last year, it was only down 0.5%. That performed excellent. I think another area that looks pretty bullish for 2023 is DBA. That's the agriculture ETF. Okay. Again, our mechanical trading systems, besides our market analysis, our mechanical trading systems knocked it out of the park last year. We had something like 120 trade signals for the reversion to mean systems, SPY and ES. And in 2023, I'm hoping to bring more ETFs to those. Maybe like a basket. I've been talking about that for a while, but I do promise I am going to do something with that. For 2023, my guesstimate is we either form, in the short term, we form a higher low here and then push up again in a wave C. So the pullback recently is a wave B. We get to move up in wave C. And then we get to move down to new lows. The very bearish view is that we get a little wave 2 bounce here and then we start a wave 3 decline. And on those targets, my targets would be around the low 3,000 area on the S&P 3,200. But then I think we put in a good 6-month bottom at least sometime in 2023, later in 2023. And that'll be something you can actually buy and hold for a bit, okay, instead of just a few weeks. All right. The bullish view is that we put in a low for the bear market, and we've had a wave 2 pullback, and we're going to start a wave 3 move up, and we'll eventually go to new highs. I don't favor that. Steve doesn't favor it. Okay. Again, going to start with the newsletter here. The first thing we're going to talk about is the reversion to mean systems. Then we'll move into the general market, look at some indicators, precious metals, bonds, commodities, etc. Okay, let's go ahead and get started here. So, first off, let's talk about the reversion to mean systems. Like I said, they knocked it out of the park last year. The reversion to mean systems, what I have is 22 systems, so individual systems, not system. That's part of the risk mitigation. And I run it across both the SPY, ETF, and ES futures. And I send out trade notifications for entries and exits. And because of the volatility last year, these systems had a lot of trades. They like high volatile conditions. So you can see here's the trades that I sent out for SPY. If you look here, 64 trades last year. That's quite a bit, mixtures of the longs and shorts. And currently we do have a couple open trades here. We have an open trade by the RSI 40, and we have still this bear long trade, which I held manually. We have a stop in place. Okay. Next, image number 3. This shows you all the trades that I sent out last year for the ES systems. They actually did an extra trade, 65. And, the way I show it on the website, we take MES futures. That's the micro futures contract. Again, depending on your risk tolerance and account size or whatever your objectives, you could trade the regular ES futures, or you can substitute ETFs in place. So like SPY, SSO, UPRO, stuff like that. SH, SDS for the inverse. Okay, but you could see a lot of trades this year. And if you just did the micro, you'd have made 50 grand. But here's the more impressive thing. On ES, the systems have captured over 4,100 points, which is just unbelievable. So remember, that's well above the index. So how many systems out there have captured more points than what the index is worth? So again, sign up to Breakpoint Trades if you're not a subscriber, and you'll start receiving these trade notifications. That's part of the membership. Okay. Next. So this image here, this is just show you what's open here. Let me move this over a little bit. Apologize. So these show you the subsystems that I run on SPY. These are just the longs. We don't have any open shorts. So you can see recently, last week, when our CCI system closed out, it had a first and second entry. Nice trade. That's one of the higher statistics systems. It's something like a profit factor of 80, I think. And one of the RSI 40 went long late last week. So that's what's open. We have an RSI 40 open on ES as well. Okay, but again, remember there's 22 systems that we run on both the SPY and ES instruments. We have 9 systems that look for short opportunities, and 12 systems that look for long opportunities. Okay. Again, congrats for those of you who've been taking those system signals last year. They've been doing awesome. Next. You can see what transpired last week. The indexes ended up down fractionally. The market sectors, we follow 21 of them here. Most of them were down. Again, some small exceptions here with energy, banks, financials, US dollar down 0.6%. Cryptos were flat to down. They were mixed. Commodities were up. Natural gas has been getting hit pretty hard lately. And let's see, precious metals and it closed up for the week. But one warning here is the stocks, the miners, they tend to lead. They were down. And you can see what happened with bonds. TLT down strongly, and 10-year up. Next. Item number 6 shows the economic news calendar for this coming week. So you can see on January 3rd, ISH marketing PMI, consumer spending, ISM on the 4th, ADP, initial jobless claims on the 5th. And of course, being a new month, you have the jobs report on Friday. Comes out 1 hour before the market open. All right, guys, let's go and jump to the index charts. So first off, let's look at how things performed last year. So this chart, each candlestick represents 1 year. So this is as of the close of 2022. And you can see the Dow closed down the least. Again, that contains the lower PE stocks, not the growth stocks. The boring used to be the boring stuff, but that's where money is rotated into last year. Okay. Anti Kathy Woods. So anti Tesla, you know. Anyway, down only 9.4% for the year. The S&P ended up down about 19.5% for the year. Nasdaq ended up, I apologize, the Dow was down 8.8% for the year, not 9.4. The S&P down about 19.5%. The Nasdaq down almost 33%. Again, Tesla, Kathy Woods, whatever, Squarespace, all those very high growth names getting taken to the woodshed, and quite recently Apple. Small caps, IWM, about 20.5%. Commodities did the best last year, up 19.3%. Remember, I talked about that my last newsletter of 2021. I said commodities would outperform, and that's what happened. TLT 20-year bonds down 31.2%. Again, the 60/40 models that investment advisors use, they stuck in bonds, they got slaughtered. Because usually their model, hopes that bonds rally when the market indexes sell off. But this last year, you had a double whammy. Next, image number 8. This shows you just how things ended up as well. I have the SPY, Qs, the Dow, VYM, that's that Vanguard ETF, and XLE Energy. Now, XLE Energy in purple did the best. Okay, then the Vanguard did the best, VYM. Then the Dow, the SPY, and then of course the Qs were the worst. Next, chart number 9. Here's a weekly view of VYM. Let's make sure. There we go. You can see, again, this only closed down about 0.5% for the year. You can see how well it's done. In fact, it retested the highs in November, made briefly new highs. So this is outperformed. Again, it focuses on low PE stocks with dividends. It's usually a boring stock ETF, but in this type of environment where folks are not chasing growth, this did the best. And I do think this will continue to outperform overall. I really like this one. Next, let's go and move back to the general indexes. So each candlestick represents 1 month. So monthly charts of the 5 key major indexes: Dow, S&P, Nasdaq, and Russell 2000. You can see I have this going all the way back to the 2008, 2009 lows with Fibonacci areas. You can see December ended up being a down month. Again, that's why you can't just follow statistics, guys. A lot of people always think that December has to be an up month. It was a pretty good down month. Okay. Again, the Dow corrected the least. The Nasdaq area still down around that 38% fib retracement from the 2008 lows and 2009 lows to the recent highs. And again, the one thing I've been talking about, and I talked about it in late 2021 and then of course early 2022, was this classic blow-off move. You have bull markets and then they tend to end with a blow-off move. And quite honestly, guys, when I look at previous bear markets, a lot of times these blow-off moves end up being fully retraced over time. We're a long way from that, aren't we? Again, guys, just think about it. We came out of an everything bubble from, you name it, from stocks to real estate to NFTs, with cats that were trading for 5 million and are now essentially worthless, crypto. We had a zero interest rate environment. I don't think we're going back to any of that anytime soon. I mean, this bear market, I think, could last a few years. Next. Chart 11, here's a quarterly view of the indexes. Now, they did end up for the fourth quarter. I talked about this at the beginning of last quarter, in third quarter of 2022. Talked about these middle quarterly Bollinger Bands. And you can see, for now, we've found some support there. Again, not surprising. The Dow obviously had the biggest bounce here, and Nasdaq the least. Next, moving into our proxy index, the S&P 500. So here's the monthly view of the S&P 500 with this channel going back to the 2009 lows. Again, you can see the wave count structure. We identified this as a wave 5 high back in December of 2021, confirmed it in January 2022. A lot of elliott waivers were still counting this as a wave 3 high. We counted it as a wave 5, and so far that's been the case. All right, series of lower lows, lower highs this year. Over time, I'd expect prices to come down at least to this channel line. Again, over time, guys, right? Whether we come down there now or we do it sometime later in 2023. Okay. Some other things, useful indicators, the 14 stochastic. This is something you guys can use on monthly charts. It tends to bounce around the 50% area or stay above it in bull markets, falls below it in bear markets. Okay. You can see it fell below that in early 2008. And of course, last year, the first few months of the year. Next, chart number 13. Here's another kind of, I call this a reversion of mean chart. Each candlestick represents 1 year. So this is a chart of the S&P back to 1980. And again, quite simply, so this is your 9 EMA. Quite simply, over time, if price eventually retests the 9 EMA, and usually in bear markets, will undercut it. Okay, just like you've seen here in the 2001-2 bear market, 2008 bear market. We did undercut it a little bit here in February, March 2020. That was very brief. It was essentially a quick hard correction and rebound. But look how far away we are, still way above the 9 EMA. Again, over time, I do believe we will eventually tag the 9-year EMA and even undercut it. Okay. What I don't see is the market just going back to new highs here. Next. Chart number 14. Here's another monthly view. Shows you the same time frame back to the 2008-9 lows. But here I have a couple channels to monitor over time. This one here, connecting the bodies, comes down around 3,400, and one down here in the low 3,000s. Okay. And again, guys, like I said, we had a classic blow-off move from that February, March 2020 low. And then, that final QE push up where stimulus checks, QE galore, so much money in the system. A lot of times in bear markets, these blow-off moves are fully retraced. And I know that may seem impossible, but could the S&P go down to these low 2000s eventually? I think it could. Again, that's if the bear market lasts for a few years. I certainly don't see it going right down to there now. But, if this bear market lasts a couple of years more, I could see it eventually working there, in the next major leg down sometime in the future. Next. Chart number 15, here's a weekly view showing the expanded triangle here. Again, we had a series of, with an unable break and hold above this downtrend line. We've had a series of lower lows and lower highs. Okay, recently we stopped at the downtrend line and the 50-week moving average. Again, just textbook. The back test occurred in, you can see in that August high, that was a beautiful short, and of course recently. Now, the big question here, short term, do we go and make a new low now, or do we rally up and maybe in a wave C and then sell off sometime first part of the year? We'll see. Next. Chart number 16, here's a daily view of the S&P. Again, shows you the progression this year. Lots of volatility. Again, back in that late November time frame, early December, was that 4100 area was just amazing. We tagged this in basically the last day of November, which corresponded with the downtrend line from the January highs connecting the March and August highs. And we had the big area here, horizontal area, 4100. So just textbook. We completed a symmetry ABC move up. So this is a beautiful short. And then we back tested it here, essentially a double top, and down here. Now you can see I added fibs. As long as because we're still above this 61 fib at 37.30 roughly. Again, it's still possible this is a wave B pullback, and we could still get another C move up before we begin the bear market. Or we get a wave 2 bounce here and then go straight, then go down into new lows then. Next. Chart 17, here's a zoomed in view of the daily. Again, even if you didn't short that 4100 area, you could have got a nice short right on that opening day of the breakaway gap. Next. Chart 18, here's another daily chart of the S&P with some potential wave counts here. 3 type of wave counts. The one in green is the alternate bullish count, which we do not favor. Again, that would have the end of the bear market here. You can clearly see 5 waves down, 1, 2, 3, 4, 5 in October. And this would be a wave 1 up, a higher low, wave 2 pullback, and then launch up in 3. Again, I do not favor that at all, just given everything else. But again, it still is a possibility, and that's the thing about Elliott wave. You have multiple scenarios. The 2 I favor, obviously, the other ones. Again, one view would be this purple. That's over time would still lead down till the lower 3000s, but what you could have is a higher low B here, and then move up in C, and then you decline, right? Maybe that would start occurring in February, or who knows. The most bearish view would have this initial pullback as a wave 1 from the 4100 high. We're going to get a lower high wave 2, and then we go down in 3. And then, like I said, my targets would be lower 3000s, 3400, 3200, something like that. And then I think we put in a good 6-month low, trade low. I would rather this occur, but again, either purple or green or red. Next. Chart 19, here's a Renko chart. By the way, each box size is 10 points. Sometimes these can provide nice clean levels. You could see this, how we bounced off a little support here, which has been resistance and support. So this is kind of a key level. If you're long right now, clearly your stop, you can have it pretty tight at this point. Next. Chart 20, here's a 2-hour view of the S&P. Again, you can see we had this uptrend channel. We had a perfect little double top up here. And you can see the 5 waves down, 1, 2, 3, 4, 5 into around the Christmas time frame. That was 336 points. So because we did break symmetry, odds do favor a lower high. So again, overall, I would either view this move up now as a wave B, or a wave 2 would be the bearish one. Again, it's possible that it did complete here. You do have a little 3 waves here, A, B, C, but I'm favoring more up instead of just straight down from here. We'll see where futures are open tonight. Next. Chart 21, here's a 60-minute view. So again, you can see your 5 waves down, wave possible, the wave 1A, wave 2B, C3 up. All right. I kind of favor this C3 up, and here I added fibs from the 4100 I, 61 fib at 39.70, 50% fib 39.30. Again, if you're long, guys, quite simply, stop could probably essentially go right here at this low, pretty tight at this point. We had a little window dressing last, half an hour on Friday. Not surprising. Next, chart 22. Here's a 15-minute view. With the with fibs, again, shows you those levels. Finally, chart 23, 10-minute view, kind of a coil forming at this point. Next, moving on to the KISS time frames, the KISS charts. So chart 24, here's a weekly view of the KISS trend system. Again, this has done a good job. It kept you out of that February, March correction that you had in 2020, got you back long. It got you out in January at the stops. And then, this year it went long once there in early July, got stopped out at 40.58 and has been staying in cash. Remember, these are trend following systems. They don't do shorts. Again, these are more indicative of like a 401k type where you can be long, you're not typically short. And so we're in a bear market, and so these are going to be in cash on the indexes for most of the time. You can see lately how the ATR has been a really good resistance area. Next. Chart 25, here's the daily KISS trend. Again, You can see it's a little bit more active. You can see it caught along there in July to August, made a little bit, right? Again, the KISS trend's never going to get out at the high. It's never going to get at the low, right? And it was long here in November, and then got stopped out here a couple weeks ago at the smart trailing stop at 39.13. It's in cash. Next, chapter 26. Here's the 4 time frames. Again, on the daily, we lost the ATR. That's now a resistance area, as on the half day, it's a resistance area. Price has been trying to find support around this cycle support. You can see here on the 130 minute, we do have a resistance cycle here, so that's concerning the ATR. On the 60 minute, quite honestly, price has been following the 60 minute cycles really well here. You can see we had an into bearish rally here, marked a high, bullish rally that marked a low, a little resistance cycle, support cycle, resistance cycle, support cycle, and price bounced right off that support cycle on Friday. So lately, this time frame has really been following it. Next. Moving on to the Dow, we're just going to look at it briefly. Here's one of the charts of the Dow. This is one of the potential wave counts. Again, it's held up the best this year. Shows a wave B, C high up here, perhaps. Coil forming at the moment. Next. Chapter 28, here's another version of the Dow. Formed a wave 5, C low here, perhaps. Broke the downtrend channel line. Broke the series of lower highs. And pull back to backtest this broken trend line. Again, this area has held up the best, obviously. Next. Chapter 29, here's a 2-hour view. Again, very tight coil here, so something to monitor coming into Tuesday. DIA is the ETF for the Dow. Next. Chapter 30, here's a monthly view of the triple Qs. Again, guys, like my comments show here, money printing bubble, blow-off move, the prior bull market. You can see, again, it's a blow-off because blow-offs, you have a step up and slope change. So you can see your general uptrend sloping here. And notice how much steeper that slope got from just those last 2 years. Classic blow-off. Again, the Qs retraced about 61.8% of that whole move up. But on a lot of these blow-off moves eventually get retraced. So, over time, again, not short term, but over time, could this Qs end up down in this range? Maybe. If so, Cathie Woods would be out of business. Next. Chapter 31, there's the weekly view. Again, similar to the S&P, but weaker, obviously. Lower lows, lower highs. And see the moving average ribbon's been a good guide. One thing I'm pointing out here, especially if this continues lower, stochastic here isn't oversold. We may need to see the stochastic get oversold here for this to be down to this area. Again, so much weaker than the S&P, obviously. Next. Chapter 32, here's the daily version of the triple Qs. Again, this stalled perfectly at the confluence of downtrend trend lines here back in December. Just amazing. Lost another trend line here, which is now your resistance. Okay. Next. Chapter 32, here's a Rinko chart. Shows you the clean levels. This is each box size is 3 points. We have a support here. You can see this was resistance up here. We're still above this support, but really below this, you got a big old air pocket until down to about 230. So short term, the bulls want to hold this level. Next. Chapter 34, here's the 2-hour view. Shows how one of our targets last week, coming into last week, was filling that gap, which we did right away. We had a divergence there. Again, didn't get very far away from the lows, did we? And that expanded triangle clearly played out. Next, chapter 35, here's a 60-minute view. So short term, the hope is some sort of inverse head and shoulder here. You see this? The only problem with it is we did not have a break in symmetry here. The inverse head and shoulder patterns are work out much better if you have a symmetry break on your head move. Okay, so what I mean by that is the largest pullback in this downtrend has been about 7.8 points. So the pullback, or the bounce off the lows here is 7.7. So This did not break symmetry. In fact, price stalled at symmetry. Okay, again, doesn't mean this won't play out, but that makes it a little bit less. But we'll see. Again, if you're long, put a stop right here at this higher low. That's a logical area. I'm hoping this plays out. I'd like to see at least move up a little bit higher. Get some good short opportunities, perhaps. We got an open gap here, too, to monitor. Next. Chart 36, here's a 30-minute view. Shows you we had a little wedge coming into Thursday. Moved out of the wedge. So far, we got a higher low here. And we'll see if we can work up to these higher levels or not. Notice, again, there's a gap here from December 22nd. And there's also a gap way up here if things really wanted to go. Next. Chart 37, here's the daily KISS trend system. Again, just like the S&P, it hit its smart trailing stops a couple weeks ago. Now, we did have a Demark 9 last Wednesday, and so far price has bounced a little bit from there, not surprising. Next. Chart 38, here's the various cycle time frames. Again, very similar to the S&P with the ATRs and stuff. We did have a Demark 9 on the daily, like I already covered, and a Demark 13 on the 60-minute. And we bounced from there. We have the ATR, which is now a support. Next, something we don't show very often, the Russell 2000. You can see this is the weekly view. You can see how it's done this year. It's done better than the Nasdaq, obviously, a little less. But, it's been down similar move to the S&P. But you can see we had a big support range right in here where we did hold, basically tested it twice this year. That was the highs from early 2020. Made sense. That is now a support area. Over time, if this does fail, these are some other targets to the downside. Next. Chart 40, here's a daily view. Again, we do have a lot of resistance up here. Notice all these moving averages. You have the 20-day, the 50-day, the 200-day. Again, those are widely followed moving averages. So on a rally, this is obviously a lot of resistance up in here. All right, guys, that does it for the major indexes. Now let's move on and look at a few market sectors. So chart 41, this chart shows you 10 of the major sectors. Again, kind of a mixed bag last week. What I'm going to do is cover a few of the major ones. So chart 42, XLK, technology. Again, just like the Qs, this did the worst last year. It is obviously off the lows, though, quite a bit. And but you can see overall just downtrend channel. Lower lows, lower highs over time. Next. Chart 43, here's the daily view. Again, this little rising wedge played out that we showed in early December. Bouncing up here a little bit, we're still below the 9 EMA. And again, if you get above that, then you have the 50-day here to contend with and the declining 20-day. Next. Chart 44, there's a 60-minute view. Again, just like on the triple Qs, you got a wedge here that potentially broke out on Thursday, a little higher low. So I'm hoping we can get the follow through to the upside on that. Next. Chart 45, here's XLC, communication sector, contained a lot of those former FANG name stocks, Facebook and Google and all that stuff. But you can see how unbelievably decimated this sector was. Didn't quite retrace the whole blow-off move from the March 2020 low, but man, retraced a lot of it. This is a demand zone down in here, and then would be your February or March 2020 low. I do think over time we'll get there, but again, has some divergence down here. One thing to monitor over time is symmetry, guys. Again, symmetry is a very simple concept. I'm not going to go over the details here, but remember, you measure your point rallies. And so far, that has stalled the rallies. Now, when we have a rally larger than the biggest rallies here, that'll be a bullish break in symmetry. Next, chart 46, semiconductors. Nice sell-off recently from the wedge. Again, you've got the 50-day moving average, 20-day just above to act as potential resistance zones. Next, chart 47, XLF financials. They've done a little better here. They broke their channel back in October, pulled back, and they're still out of the channel. They're holding up a little better here. You can see the moving average ribbon is bullishly stacked, pinching right now. First pinch. Next. Chart 48, XLF on the daily. Again, it's above the 200-day moving average. Right. Next. Chart 49, IYT transports. Still weak here. still below the 9 and 50-day moving average and 20-day. Next, chart 50 biotech. I'm still keeping an eye on this thing. This thing has been super duper choppy for the last 4 months. But you do have a well-defined pattern here. If this were to break out of this pattern, this could start a wave, at least a wave C up. So I am monitoring this. I've been stopped out once or twice on this puppy, but I will catch a move when it does finally break this cleanly. Next, chart 51, XLE Energy. Again, this sector outperformed last year. Remember, I talked about this in January of last year, said energy was the place to be. And again, it wasn't a straight up move. We had a good 5-6 month consolidation in the middle of the year, but that area's held up. And remember, a lot of these stocks have lower PEs and they make money. So longer term, this isn't an uptrend. Next, chart 54. 2, here's the daily view. So far, we're chopping around here. What I don't know is if this is some sort of wave B bounce and we can still going to need a C move down. That's something to monitor. Next, chart 53, oil services. Now, they've rallied quite a bit back. The bullish view is you had simple 3-wave pullback here, ABC. Again, another very strong sector. Next, talking about some other sectors outside the U.S., emerging markets. Again, I've been talking about this. You had a bullish break in symmetry there in November. So again, here's the largest rallies in the downtrend that began in early 2021, guys. In blue, clearly we broke symmetry up in here. So that is overall favorable for this area to look for higher lows now. Okay. Next, chart 55, China. Here's one of the ETFs. Again, you also had a bullish break in symmetry here. So, and China's, been reopening and et cetera. So, makes sense to me. All right, now let's move and look at some important market indicators. Chart 56, here's the VIX. VIX lately has been kind of chopping around here. It's forming a coil is what we're monitoring at the moment. Otherwise, guys, if you're new here, whenever it gets outside the Bollinger Bands, upper or lower, that tends to give nice trade opportunities. Right now, we're right in the middle. And guys, what I call that last year played out, that 30s, low 30s to upper 30s capped the VIX last year. Now, in a true bear market, though, I do eventually believe we will get a move up well above that. If the S&P goes down to the low 3000s early this year, I think we'll retest these areas and maybe finally break that. Next, chart 57, here's the put call ratio, CPC. Last week, this had spiked way up out of norm to 1.9. To me, that was a screaming buy, and it's come down quite a bit since. You could see that was well above anything we saw the previous year or previous several years. Next, chart 58, here's another put call ratio. This one uses the 200 length Bollinger Bands, so instead of the 20. And you could see some spikes out of here. Again, sometimes when it doesn't spike out of this 200-week Bollinger Band very often, but sometimes in the past those have been pretty good lows or major lows. Or for this year, it's occurred a few times, and they've always occurred at least at some sort of trade low for a few weeks, something like that. And we did have that last week. So that would more support the market moving up in that wave C, or at least a wave 2, at least to higher prices first. Next, chart 59, NASI. This is the NASI indicator with the 2 and 5 EMAs. So simple crossover system that's worked fairly well this year. Again, it's not perfect, but you can see, got you long there in May, June timeframe, got you out in August. Got you back along in October, got you out in early December, and you can monitor this to see when it crosses back again. Next, chart 60. This chart shows the S&P versus the inverse XLP S&P ratio. I know that's a mouthful, but again, XLP tends to move the opposite to the market, and this was given a big warning, from that market rally from November into early December. This was just heading down, and that obviously played out. Next, chart 61. Here's the NAHL Nasdaq new highs minus new lows cumulative, and this did a fantastic job. This crossed over in December of 2021, guys, and I pointed this out back then. Go back and look at my newsletters over a year ago. It's crossed down here, gave you a big old warning, and it's never even tried to bounce. Look at this. So basically, that just shows you that huge negative breath occurring in the market. Next. Chart 62, here's another outstanding chart. The Nasdaq highs minus the lows, but we have the difference here at the top. And whenever this thing approaches zero, has given all these short opportunities. I think there's 13 or 14 of them here. All of them would have given you nice trades. And it's actually approaching zero again. It's not quite there, but this is something to watch if it gets up into that area, guys. Next. Chart 63, here's the Nasdaq highs minus lows again. I'd say another positive potential for the market, though, is these spike lows here have gotten less and less. You can see here from, the low actually occurred in early 2022. And then while the market made another lower low here, this was higher. The market made another lower low here, this was higher. And then right now it's way up here. Next, let's move on to bonds. So here's high yield corporate. Market tends to follow that. Again, just like the S&P broke this channel. It's bouncing a little bit. Overall, I would favor a lower high here. Could even form a little head and shoulder perhaps, but something to watch. We did not fill that open gap. Next. Chart 65. Chart 65, here's TLT, 20-year bonds. And again, really good rally from this November breakaway gap. Rallied up. But pretty good pullback here lately, and so far we're below the 50-day. Can this form a higher low or not? I know this has been selling off pretty strongly since the market passed that new spending bill. So again, guys, eventually you just can't spend forever and ever not have consequences. But we'll see if we can regain this or form a higher low or not. Next. Chart 66, here's a weekly view of the 10-year Treasury yield, moves inverse to bonds. So again, you can see we've had a perfect symmetry bounce here. The largest pullback was about 9.6 points. So 9.3, so essentially bounced at symmetry. Again, the question is, will this make another higher high or is it going to make a lower high? I'm not sure. I think it's going to make a lower high, but we'll see. Anything goes. Next. Chart 67, here's a zoomed out monthly view going back to the early 1980s. Again, guys, remember, the era of low interest rates is gone. This 35-year channel was broken early last year. So over time, long-term rates will work higher. We're not going to go back to these zero interest rates. Next. Chart 68, here's TLT. It looks like this got out of order. This is the monthly view. Shows you the longer-term view of TLT. Again, TLT lost over 30% this year. So the 60-40 model for stocks has been broken that typical advisors use. This shows you some potential longer term targets. You got a demand zone down here. So if interest rates were to make a new high, this would probably be my target area. Next, let's move on to commodities. Chart 69, DBC, weekly view, up about 0.5% for the week, as you can see. Next, chart 70, here's DBC on the longer term view. Again, this began a big uptrend in 2020. It's in a bull market, okay, unlike the S&P. But, pretty good correction from last year. It topped out mid last year. It is holding this support for now. And next, chart 71, there's the daily view. Next, chart 72, crude oil, weekly view. It had a big rally first part of the year and sold off, but energy stocks held up. They just had more of a sideways correction. But anyway, overall downtrend channel here. So this is what we'll be monitoring this year. If we break this or not, you have the 200-week moving average down here as well. We did have some divergence down here at the lows. Next, chart 73. Here's the daily view of crude oil. Broke out of this little channel. Had the 50-day moving average just above there. Next, chart 74, copper, weekly view. basically flat for the week. Again, it's had more of a choppy move up here, kind of an ABC. To me, guys, this is a big resistance zone where it's likely to fail and form a lower high. Again, assuming we go into a deep recession. Next, Jabber 75, there's the daily view. You can see lately this area up in here is big resistance. If we can break above that, then we can have a bigger rally. Next, Jabber 76, DBA agriculture. Again, bull market. Topped out May of last year. Nice correction, but I think this is a correction in a bull market. I'm trying to break out of a weekly coil now. Next, Jabber 77, DBA on the daily. You can see you broke out of the coil here short term a couple weeks ago. I'm long some of this. Next, Jabber 78, zooming out to the bigger picture view. This is a monthly view of DBA again, guys. This is what is in a bear market from 2011. It broke out finally in late 2020. This clearly, I mean, guys, just think about it. Does this look like a start of a bear market? It just looks like no, it just looks like a pullback in a bull market. Look at your volume patterns. So to me, this has long-term potential. You had the bullish moving average break here, and you're having just simply a consolidation. Next, Jabber 79 DBA ratio. You can see we're forming a big coil here. We're likely to break out of this coil sometime early this year. It is bullish. Moving averages are bullishly stacked. You can see for all those previous years they were bearishly stacked. They flipped in early 2022, showing that DBA would outperform the S&P. It had underperformed all those years previously. Next, Jabber 80. Here's uranium. Going to keep an eye on this. Again, I still view this as a potential bull market. It broke out of a big multi-year base here in 2020, had a good run up, and it's been in a big, long consolidation. It's coiling up here, going to be monitoring which way this breaks. Moving average ribbon starting to pinch, and it is bullishly stacked. Next, Jabber 81, here's a weekly view. So this shows you the bullish view that it's simply having these ABC, ABC, ABC type corrections. Wedge pattern eventually will break out of there. One chart I forgot to add here is natural gas. That's been very weak lately. I'm not going to show that though. Let's move on. Jabber 82, Bitcoin, broke this big shelf support back in early November, and really since then it's been just sideways action. Next, Jabber 83, there's the weekly view. Again, our target area has been this 10,000 to 12,000 area for a while. You can see this was big support resistance back in 2019, 20, 18. So this, to me, seems like a good longer term area for it. Next, moving on to the US dollar, Jabber 84. There's the weekly view. So far, it's retraced almost, not quite to 50% fib, but it's retraced quite a bit. We got a double bottom back here in 2021, just a parabolic move up, and so far a pretty big correction. Next, Jabber 85, here's the daily view. Still kind of monitoring this wedge here, but obviously price action has been weak. It's been below the 200-day moving average now here for a while. You can see the back test of the broken trend line back here in early November. Next, Jabber 86, there's a monthly view. Steve had this wave 5 count. We didn't obviously get up to that 1618 target, but he had this as a 5, and so far that looks to be what the pattern was. Next, Jabber 87, here's the Japanese yen. They had a nice bullish break in symmetry here. I talked about this back in October, and it's had a big run up as well with the pullback in the dollar. The other one that's had a big move is the euro, which it looks like I forgot to add here. Apologize for that. Next, guys, let's move to precious metals. So gold. So here's gold, and this is kind of wondering what's going to happen with gold here. So gold, as you know, topped out in the bull market in 2011. Then it went in this long bear market, formed a rounded kind of a saucer bottom here. 1, 2, 3, 4, 5, 6.5 years. Broke out of that, had a big move up to the 2100 area. You had a double top. Now the very bullish view, guys, notice your MACD is recycled back to 0 here. The very bullish view would have this as an ABC, and we're going to move up here and a good strong wave 3. If that were the case, we're going to see gold up in the 3000s. But again, you know, the onus is on the gold bugs for that. Next, chart 89. Here's a weekly view. We had a falling wedge here a couple months ago. So far, we've retraced not quite to the 50% fib. You can see again your big resistance area, double top up here, kind of big support here. We regained that 200-week moving average, which was a positive. Moving average ribbon here is pinching on the bearish side, so the onus is on the bulls to get this to flip up, because this could reverse down here if it wants. And the stocks, you want to see them leading, GDX GLD ratio, and you can see so far it's been weakening on this move. Next, chart 90, gold on the daily. Again, you had a nice triple bottom back here in November. You broke out of the downtrend line, 50-day moving average in early November. So you could have went long here, or you could have waited for the break, which made sense. So far, we have a couple higher lows in place here. We'll see if those can hold or not. Momentum has been waning here. Again, is this going to just crater, or will you get another pop up? It's going to depend on the dollar. Next, chart 191, silver. Nice rally off that big demand zone. Here I added a downtrend line from the 2021 highs to monitor. Next, chart 92, here's the daily view. Again, it had a beautiful rounded bottom here. So this does look decent, even if it does pull back here. 50-day moving average would be a big support if it loses the 20-day. Next, chart 93, GDX weekly view. Again, rallied off this big support zone. Again, moving average ribbons were wide here. Every time those ribbons get too wide, you get reversals. But they're not wide anymore. They're pinching. They're pitching on the bearish side. So does this mean it reverses down again? So we'll see. It's also below the 200-week moving average, testing the underside. Okay, that's resistance. It needs to get above that on the bullish case. Next, chart 94. Here's the daily view. You got this pattern here. Again, we're just going sideways, forming a maybe ascending triangle would be the bullish case. If we can hold this lower trend line, 50-day moving average. We got to take out resistance here. Next, chart 95, GDX GLD ratio. Again, just monitored a couple things here. The ratio trend lines, moving average ribbons. Again, for precious metals guys, they do better when the stocks outperform. And short term here, they've been underperforming. Okay, they did start outperforming in November, so they've lost a little momentum here. So the onus is on the bulls here if they're going to keep this going. Finally, let's move on to some trade ideas, recent ones that we've had. So chart 96, CBay was a long idea of mine 3 weeks ago in early December. Cup in hand, and look how well this puppy's played out. One hell of a percentage of move. Congrats if you held this thing and you didn't take your profits way too quickly like I did. Next, chart 97, 9. This is an energy play. This is a long idea I had back in October. We played this fantastic, rallied up here, and you can see all the higher lows that have occurred. If you're long this long term, here's your next stop. Look at all these higher low stops you could have put in place to keep you in it. Next, chart 98, 9 on the weekly. As I discussed back in October, this came out of a long-term base, which is bullish. I like things that are coming out of basing patterns, and you can see rallied up. And these are some of my longer term targets up here, 16, 18, 20 over time. Next, let's talk about poor Elon and Tesla. Tesla's been absolutely pummeled. Elon's lost something like $200 billion of his, unrealized net worth. But anyway, this shows a potential wave count. We had a little bounce last week. For now, this wave bounce appears to be maybe just a wave 4 only, and once that ends, you get another wave 5 down. So Tesla still may have a ways to go over time. Next, chart 100. Here's another chart of Tesla. Shows you some of these longer term levels. One of these was met last week. These shows you some long term areas, like way down here in the 40s, 50s, price by volume. Next. Chart 101, Tesla Rinko chart. It's also been a pretty good guide. You can see your big volume support is way back here. Next, chart 102, Tesla on the monthly. Again, guys, You can see a really big support on Tesla is honestly way down here at this trend line here. Resistance from 2017, 18, you know, and in this area, 2020 lows. Is that impossible for it to go there over time? No, guys. And that's the thing, guys. Think about it. Just down here, think about it. That's only early 2020 levels. Again, I don't think it's going straight there, like I said, but it could go there perhaps over time. Next, Chart 103, Apple. You can see this pattern's played out. We called for this wave B high back in August. Recently had a coil, broke down. Now the bull's hope here is we're forming a wave C low in the short term, then have some sort of better rally. But Apple, obviously, finally got its butt handed to it a little bit. Trevor, 104, Apple on the bigger picture chart, guys. Just showing you the monthly here. You know, this thing has been crazy, but it got parabolic here. And guys, you know, on a really strong bear market, could it end up at these levels over time? These are some of the demand zones. That's possible on a deep bear market. Next, Trevor 105, there's Apple on the logarithmic chart. Got a trend line here on the logarithmic, even down into the lower 100s, 120 or so. Next, Trevor 106, McDonald's, recent short idea of ours that's playing out. And guys, that'll do it for the charts. Again, enjoy the rest of your day off here. Monday, January 2nd. And then, I'll see you guys tomorrow. Take care.